Alasdair, look, on the website goldprice.org, it shows that gold's price has risen 41% from 12 months ago, and silver is 37.6% in Australian dollars. In one of your recent Substack reports titled Copper's Collapse Bugs Silver, you have reported that gold could rise from here to year end of US $900 to $1,000. That's an increase of 30%, and that silver could even do better. What brings you to this conclusion?
That estimate is purely on the basis of technical analysis. I don't personally make forecasts, as it were. But if the technical analysis, the patterns in particular, suggest that there is a target level which will go to, let's say, $900 above a breakout point, then I think that is an independent estimate of where it is going. In this particular case, if you look at gold, you can see that there is a pattern which is called a pennant. Now, a flag is one which has got got parallel lines on the top and the bottom of the pattern, but a pennant is one where they converge. In this particular case, the convergence has been from, if you like, rising low points with a flat top forming the pennant. The point about the flat top is that it's almost as if the sellers or the buyers are keep on knocking a level, trying to get above that level, and the sellers suppressing it, and eventually they're going to give way. This tells us two things. The first thing it tells us is that once it breaks out of that level, then it is going to move really quite quickly. That's the first thing. The second thing is really the experience of how these patterns work and what they reflect. And if you go to the Vade-Mecum of technical analysts, which is a book called Edwards and McGee, which was originally published, I think, in the, 30s, 40s, 50s, whenever. I mean, it's been around for a very long time and revised and revised. When it comes to pennants, they say that the minimum objective, once you break out of that pennant, is the same distance as the move into the pennant. And pennants normally are, if you like, sort of almost like halfway moves in a general re-rating of a stock or a commodity or whatever it might be. So the move in gives you an idea as to how far the move out will take gold. And in this case, what we're looking at is almost a $900 rise above 3,440, which is that top level of the pennant. If you have a look at the pattern on a chart, it is absolutely clear, and it's easy to see what I'm referring to. Now, obviously, if gold is going to rise by that amount, I mean, it's going to soar through 4,000, it will then need a far larger consolidation. But what we do know is that it's not gold rising so much, it's the dollar falling.
Yeah.
And with it, other fiat currencies, obviously. So we have to look at it in that context as well, which is why I never make forecasts for the gold price. I mean, I can see the dollar going lower, but what the consequences will be for the gold price, I don't know. But that $900 expectation of a move once we break this pennant pattern is purely based on technical analysis and absolutely nothing else.
Yeah, very interesting. And I know you are right, speaking from an economist's point of view. Speaking from our point of view and with our clients, I continue to say the further we move away from 1971, now it's 54 years, the more the deficits are increasing, which means the interest rates on the deficits are increasing. And you really hit it on the head. We really got massive problem in coming into it. We've got a massive problem now, let alone in 6 months' time, or 5 months' time or a year's time. It's just going to increase and increase. So I just advise to our clients, you just got to protect yourself and buy as much gold and silver as possible.
What I would add to that, Brian, is that, to expect gold or whatever to go to certain levels, or silver even, it misses the point. The point is that it's credit, which is where there is increasing investment risk, increasing risk to your wealth. And we're now moving into a period where instead of looking for wealth accumulation, you really want to look at wealth preservation. That is the emphasis. So it's not a question of trading these moves. It's a question of getting the hell out of risk. And I think that is the attitude which everyone should adopt.
Well, hopefully everybody listens to those words, get the hell out of the risk. And great point.